The information supplied on this program does not consider your personal circumstances and is general advice only. You should not act on any recommendation without considering your personal needs, circumstances and objectives. Retire Invest recommends you obtain professional financial advice specific to your circumstances. Jeff English is an authorised representative of RI Advice Group Proprietary Limited.
23 to 2, Jeff's with us just to have a little bit of a look at what's been happening since the United States presidential election in relation to the markets. And we'll start with the American stock market because I don't know whether this is entirely because of what Donald Trump is doing, because the markets seem to be heading in an upward spiral before the election anyway.
Agreed.
But what's happened is that it's hit that 20,000 point mark for the first time ever. So it's now dropped, but it's dropped, you know, into the 19,000s.
Handful of points, yeah.
But I can't remember ever hitting 19,000 much.
No, it sort of hung around in the 18s for a long time, Graham. I think it was heading towards 19 and then back down again for whatever reason at the time. So it has run ahead quite well. And obviously there was a fairly significant pause pre-election, the Trump crash, if you like it. But yeah, obviously now markets are quite comfortable that, it's onwards and upwards from here.
Well, it's much the same as Brexit. You know, once the Brexit thing settled down, markets were okay about it. There's some suggestion that Trump and some of the policies that he's trying to introduce could be good for the economy. That's why the market's reacting. Would you agree?
Yes, absolutely. And that's what we're finding. And, I'm obviously speaking with clients a lot and reviewing portfolios, and we found that the 2016 as a calendar year ended up looking quite good. But it really didn't feel like it as we went through it. We had a very lumpy year with Brexit, with the US election and all sorts of other geopolitical things going on. So I wouldn't be surprised to see 2017 just as lumpy.
Okay. Well, the Dow Jones has hit that 20,000 mark. It's back to 19,929. What about other markets around the world? Are they still up?
Well, if you look at the numbers that we've got here, obviously pre-today, when you look at, since that November 8 election, the Dow was up about 9%. Same here, all ordinaries about 9% up. Germany's DAX about 11. The Nikkei in Japan, they're almost 18%. French CAC about 7%. So, markets have actually reacted quite well once we got past the media and the rhetoric and the beat up that was the campaign, back to, what are the economic fundamentals sitting behind all of this. So, markets have actually reacted quite well. The problem that you've got now is what is the rest of the year? How does 2017 pan out for markets, and should you be invested in them?
All right. It's interesting, isn't it, that some of Wall Street's biggest banks have made their own predictions for what's going to happen in 2017.
Well, if you're an economist or you've got economists on your staff, you want to say something, don't you?
I'd say so.
I've got a few here. Morgan Stanley have said Trump's policies will actually boost import growth and lower export growth, which is the opposite of what his campaign proposed. Wells Fargo, 2017 will be a year for the hedge funds and for stock pickers. Volatility will be the main theme in 2017, and that provides the right conditions for active investing, which is actually a fair call in my opinion. The Royal Bank of Canada, a little bit off the wall. Markets will be at the mercy of Trump's Twitter feed. So, and as we seem to be on a daily basis at the moment, he's the man of the moment. So, there's a little bit out there, just in terms of opinion. We'll see how the year pans out.
All right. Well, of course, he's hit the ground running as far as initiatives are concerned.
Yes.
Every time you pick up the newspaper or read the television or listen to the radio news, he's signing an executive order for something.
Well, Graham, there's the two things. There's an executive order and then there's presidential memoranda. So more than a dozen of these orders in total. Not a hell of a lot of difference, to be honest, but, there's a slight difference. But he's really hit the ground running there. The Obamacare repeal, that was pledged and that's happened. We knew that he was looking to withdraw the US from the Trans-Pacific Partnership deal. Something that's interesting that it's said that one would likely have died under Clinton anyway. So, not sure whether that's speculation or not. But, he seems to be wanting to say that I'm moving ahead with the things I promised to do.
All right. So, as far as your clients are concerned, or potential clients, again, what are you advising them as far as investments in 2017?
As with anything, Graham, I think we've got that volatility here to stay. We often talk about making sure you don't have your eggs in one basket. It's all about diversification and taking the right sort of view. So these are all fairly normal things. You wouldn't say Trump's particularly normal to the scheme of markets, but there's always something like this around the corner. So it's very much about spreading the the funds in your portfolio and making sure you have the right view in mind. So, just take those things into account and get advice if you need it.
Good advice, yep. And you can talk to the financial experts at Retire Invest. You can give them a call, Retire Invest in Ruthven Street, at the corner of Ruthven and Robertson Street. All right, good on you, Jeff. Thanks for coming in, and thanks, Dave, for giving us the market update. It's now 18 to 2.